All right, everyone. Thanks for tuning in. So let's get right into this because I think that we are. Sorry, just bringing up my notes here on the other screen. I think we're could be pretty close to a top here, and I will show you why I think that. All right. So first of all, if you've been following me, I've been talking about this for a few weeks. This was the biggest inflow ever into the S&P ETF. This happened probably about 2 weeks ago. And not only was it the biggest ever, it was the biggest ever by far. What does this mean in practical terms? Well, it basically means a lot of really large buyers showed up to buy the S&P. And I don't mean like retail buyers that are buying a couple hundred shares. I mean big institutions that are coming to buy blocks of multiple million shares positions. And so what happens, the way the ETF market works is the market makers basically invent new shares and short them to them, and that money comes into the fund. So the fact that we get these record inflows shows that we have this record amount of um, bullishness. And what happens when we have a record amount of bullishness? Well, people become if people are really bullish, what do? They invest their money. And what happens when they run out of money? There's no one left to push the market higher. So we look at the S&P and just remember we're starting a new year now. Here's the S&P, the SPY. And okay, well, there's a good chance there's going to be resistance around 480, which is pretty much the all-time high back from late December of 21. And there tends to be resistance at former peaks. You can see that here. See how there was this peak in March of 22, and then we got back there in July of 23, and we found resistance again. This happens because there's people that buy at the peak that regret their decision to do so when the price goes lower. And they say, oh man, if it ever gets back up to where I bought it, I'm going to sell to get out. So you get those remorseful buyers placing sell orders at the level that was a peak. So there's a good chance there's going to be a fair amount of resistance around the 480 level. As you can see over the last 3 weeks to maybe a month, we've been in the 368 to, I'm sorry, the 468 to 477 zone. If we do break this and go lower, I think there's going to good chance there's going to be support down around here because there tends to be support at levels that were resistance, and that's the case here. And that's because you have people that sell here that experience seller's remorse. It's not buyer's remorse, seller's remorse. When the price goes higher, they say, I shouldn't have sold. If I can buy my shares back, I'm going to. So they place their buy orders at the level that was support. So 480 on the top, I would look for resistance. On the bottom, around 460, I would look for support. Now, we can go look in the tech sector, which has finally broken its uptrend. Not a huge break, but let's look at the three biggest stocks in the tech sector, which are basically half of it. Okay. Apple, Microsoft, and Nvidia. So here's our the trend break is not a support or resistance level. It's just a visual reference that helps us understand. Oh, wait a second. When something's going up, what does it got to do before it starts to go down? Well, it's got to stop going up. And if the price starts to go sideways, it just happens to cross the trend line. That's how charts are drawn. So we cross it. This could be a first sign that things are starting to head lower. If we look at Apple, biggest stock in the market, trending lower. Remember what I said, when we get to former resistance levels, we tend to get resistance again. If people that bought Apple back in July that finally had a chance to get it out of break even because the thing just fell out of bed right after they bought. So it gets back to their level and you get people that want to sell. So if you get enough of these remorseful buyers placing sellers, it's resistance. Then what the next thing that happens is that some of these sellers start to notice there's other sellers in the market. That's why the price isn't going any higher. And they start to get worried they're going to miss out. They think the buyers are going to go to someone else who's willing to sell at a lower price. So they start to undercut each other. So you get this snowball effect. So that's Apple, biggest stock in the market, looking kind of weak. Second biggest stock in the market, and when I say biggest, I mean by market cap of the company. Microsoft is right in below important resistance. Remember, resistance is a big group of sellers, so they could put a ceiling on it. And then Nvidia has been trading below this important $500 level. Interesting psychology here. The company reported blowout numbers and it didn't go higher. That means it's going to go lower. That's what we call bad action. Great numbers, but it doesn't go higher. Well, you know how that happens? Doesn't matter how good the numbers are. What matters is supply and demand. And everyone who wants to have a position in NVIDIA has it. Doesn't matter what the numbers are. They're not going to buy regardless if the numbers are good or bad. Unless they're really bad, maybe they add to their position. But once the market runs out of buyers, the only place can go is lower. All right, so let's look at healthcare real quick, because I think there's a good chance there's going to be some trades here. So the healthcare sector is up against resistance. And remember, things tend to sell off of resistance. We saw that here and here and here, and we could see it again here. Now, if we go within the sector, there's 11 sectors in the S&P. Within the sectors are industries. The biotech industry is an industry in the healthcare sector. Very overstretched. Oh, and look at this. This has been on our radar screen, which you probably know if you've been listening to me. Could see the reversal here. We've been anticipating a reversal. Again, why? Overbought. That draws sellers into the market because they're anticipating a reversion to the mean or a reversal. And we get up to a price level where there's a lot of sell interest. So there could be some trades here on the short side, meaning buying puts. You can look within the sector, maybe find some good deals in terms of how cheap the options are. I mean, you can look at something like a Beeve, but unfortunately, like a stock like this, it's so popular, the options are really expensive because ultimately the price of options are determined by supply and demand. And if something is in interest or whatever, it's just going to make it cost more. All right. And then also here within the healthcare sector, we have the healthcare equipment sector. Industry. Get them confused. We have sectors, and within sectors are industries. So there tends to be resistance at former support levels because people buy and price goes lower, and then they experience what? Buyer's remorse. Say if it gets back to my level and I can sell and get out of break even, I'm going to. So support tends to turn into resistance. So think about this. The two industries that have been driving the healthcare sector are this healthcare equipment, which is potentially rolling over, and biotech, which is really overbought and at resistance. So I would expect to see some downward pressure in the healthcare sector. And we can also look at financials real quick before I get going. All right, so financials have done pretty well, and they've kind of been holding up. But we got to watch this $37 level. I mean, this looks bigger than it is. It's really only 60 cents above it right now. All right, and I'm just going to check my notes, everybody. Hope you all have a happy new year. All right. Oh, yeah, this is what I want to show you now. Remember, sorry about that. Mental freeze there. All right. One of the things that's been driving the financial sector is the capital markets industry. And this looks like this is reversing. So when an industry has been driving the sector and the industry starts to turn, that could turn the sector. So you got the S&P, below it you got 11 sectors. Within all those sectors, there are different industries. And by seeing what's going on in one part of the market, we can make good assumptions or educated guesses on to what's going on in another part of the market. All right, everybody, Happy New Year, and I hope to see you soon. Thank you so much.